PPP became the gap. Seriously, the line between open and close.
Hi, I'm Randy Wistoff, Director of the Kansas City Zoo. We were able to receive a PPP loan through working with a local bank.
The SBA loan has helped us at the perfect time to be able to make payroll.
The PPP loan helped us in a way where we did not have to sacrifice our personal savings.
Thanks to PPP loans, Group Living is able to continue providing needed services to people who have a developmental disability.
Hi, this is Claire Otto with Sugar Divas Cakery. PPP money has helped us bring the entire team back.
So with the PPP loan, what it's done is it's really helped us keep our pivot going and keep our people working.
The PPP has certainly helped stabilize this company. It has allowed us to be sure that each employee would receive his or her normal take-home pay so that they're able to carry on with their lives.
Hi, my name is Chris Ayers, and I'm the president of A-List and Liz Aid and Transportation. Because of the SBA loan, we were able to bring most of our employees back, and we're excited to say that we're making a difference in our community.
Long story short, PPP came along, allowed us to bring back furloughed workers.
The PPP loan helped us expedite the process of bringing our weekend employees back quickly, so they were only out for a month.
We're happy to report the zoo is open again. We couldn't have done this without the help of the SBA and the PPP loan.
It relieved the pressure off of having to meet a certain sales goal.
Things just popped quick. We now have up to 13 people working, and that is within, I'm going to say, about a 7-day period. And we're able to do that because of the PPP.
We were able to keep all of our staff thanks to the PPP loan that we were able to secure.
The PPP loan, we applied for it and we got it, which has been incredibly helpful.
Once the PPP came in, I was super excited because the funds were there to take care of stuff. The PPP coming in was a huge relief.
And so if not for the PPP, we would have really suffered. It would have been horrible. We were able to bring back dozens of employees much earlier than, had we not had PPP.
Yeah, if it wasn't for that program, I don't know where we would be.
This is the Marketplace Show Reset and Jumpstart. Today we have a special broadcast forum for you. We are excited because we know how important of a role the small mom and pop Main Street businesses play in the economic engine of our economy, and we have certainly seen some unprecedented experiences out in the marketplace where businesses who have done either well or marginally well are now in jeopardy, if you will, in terms of either closing or not even sure they can continue further. And the fact is that the good news is that the federal government, the U.S. government, have made available hundreds of billions of dollars for small businesses. We know of the first tranche, the first round of funds that were made available, and that is going to come to a close at the end of March. There's some new set of funds coming in, but also what's new, there's some new guidelines and some new rules in terms of qualification, eligibility, what you can use the money for, et cetera, et cetera. And so we've assembled a distinguished panel of leaders in their respective field and head of their businesses to be able to come together collectively and have a discussion on what are the do's and don'ts, the what, when, where, and how. And so my organization, Seti, have been strongly advocating and have been proactive in being the voice and the face for championing the cause for small businesses in the community. And so we invite you to not only listen on the live radio broadcast on WSDX 970 AM, but also We're live on several streaming platforms on social media, but we're also broadcasting on television. And so we invite you to come to the website at www.jumpstarteconomy.us. Again, that's www.jumpstarteconomy.us to join the program. But most important, you can start the loan process now. So if you would like to get a PPP loan, no matter where you are in this country, okay, if you're in any of the 50 United States or anywhere in any of the territories, we can help you. We are now a partner with various banks and lending institutions to be able to provide you with the badly needed or most needed funds that you need to keep your doors open, keep your employees, your people employed, and to be able to run your business. And so we invite you to do that. If you have questions and you are watching this program on social media, you can participate because it's live and it's interactive. You're able to submit your comments and your question in the comment box. So wherever you see the live broadcast, that you see the live television, you're able to leave your comments and questions in the comment box, and we'll share that with our panel, and hopefully we can be able to answer all of your questions. So I want to now bring in one of our colleagues. She is the former Small Business Administration advocate under the Obama administration. Terry Coxum was responsible for New York, New Jersey, Connecticut, Puerto Rico, and the U.S. Virgin Islands. And Terry, our colleague, is going to be the lead moderator for our special televised broadcast forum on PPP. And Terry and our other colleagues are going to also act as co-moderators in their capacity as well. And so I want to be able to thank you and welcome to be part of the program. Terry, so take it over.
Thank you so much, Anthony. And thanks again. We had a robust conversation in our first segment, and we're looking forward to having a more in-depth conversation in this second half. And Anthony, you keep giving me Connecticut. I handle Connecticut now for the tri-state area, but under the Obama administration, it was Region 2, New York, New Jersey, Puerto Rico, and the Virgin Islands. So Connecticut was not a part of that that section at that time. A couple of things came up in our last conversation, and I think I want to pivot and kind of bring those back. One, we were talking about making sure that you're keeping you're not commingling your funds. You're keeping your funds separate as a business owner. And it's really important to be able to do that, especially with the expenses that you're looking to have forgiven. And so separate them so that you can deduct those expenses. Something else, a question came up about a business owner that already applied for PPP, was accepted, and the money is being disbursed. If you've already applied and you understand, say you applied under the net, and now you're able to apply under the gross. If you applied and was dispersed under the net, you cannot now go back and ask for more money based on gross because you've already applied and you were accepted. If you applied but your application isn't accepted yet and you realize that you used the net and not the gross, you can now cancel that application and reapply. But that's a different circumstance. If you've already received the funding, you're not able to go back, is my understanding from the administration. One of the other things that we were talking about forgiveness. And while we're on that topic, I just want to reiterate that the economic injury disaster loan advances are no longer deducted from your PPP loan forgiveness payment, and that expenses paid with your PPP loan funds are federally tax deductible. So consult the IRS on that. Expanded forgivable expenses are permissible for any unforgiven PPP loan. And that what's new is that simplified forgiveness application for the Paycheck Protection Program loans is $150,000 and under. And per the CARES Act, forgiven PPP loans are not federally taxable income. So those are all really important when we're looking to have forgiveness. And we talked about 60% can be forgiven, and we talked about the 40% that is now expanded to, and we'll go a little more into that as we go along. But I want to tag the rest of the panel back into this conversation. I know, I think it was Dr. Green was asking a question in our last conversation. I want to tag them back in. Oh, before I do that, Teeka, is that how I say your name? Teeka Cole. Teeka. Teeka Cole has joined us. And so before we get back into our in-depth conversation, Teeka, I'm going to ask you to tell a little bit about yourself and your business. And then we're going to tag you in as well for this in-depth conversation. We're getting the money on the streets, making sure our small businesses have the nuggets, the tools, and the tips to be able to use it well to expand and grow and build wealth. So Teeka, tell us a little bit.
Before that, Terry, let me just say before Teeka speaks, that Teeka's firm is the lender partner that is going to be responsible for the U.S. territories.
Awesome.
So her responsibility is going to be those businesses in all of the U.S. territories that are participating or can participate. Teeka's firm, CBG Funding, is our lender partner. So Teeka, please introduce yourself.
Thank you.
Yes, good morning. How are you all? It's lovely to be here. It's a blessing. And yes, we are partnering up, and so we can help provide these funds, help get this PPP money out to our small businesses, our mom and pops, and any of these industries who need our assistance. And so this is a wonderful forum this morning because it helps to put out all the correct information, because we get inundated every day with misinformation. Who can apply? Who can't apply? Who can this service? And also with the new SBA guidelines that were implemented just a few days ago, this is very critical to understand who can now qualify for the additional funds prior to the $20,833 that was going on during this first stage. So we'll be covering a lot of things with everyone today. And of course, if anyone has any questions, please feel free to drop them in the chat right here, and then I'll be more than happy to answer your questions. We look forward to providing this service for all of you, your industries, as well as the U.S. Virgin Islands and as well as Puerto Rico. So we're super excited, and we just want to make sure that everyone takes part in this. As he said earlier, they allocated $278 billion now recently in the new trillion stimulus package. He's also allocated another $5 billion, and this is going to be allocated for the restaurant industry, who has suffered very hard moving forward. So we had meetings the other day. We do anticipate the program will be extended past March 31st. Yes. So we're super excited about that too. Yeah. So as we have more things that come out, we'll be making sure that we put this information out so that all of our people can participate and expand on their PPP funding.
Awesome.
Lovely.
So one of the things that I want, Teeka, you mentioned this, and I want to bring this up, and then we can get into conversation about it. Who is eligible? Who is eligible for the Paycheck Protection Program? So the newly eligible are housing cooperatives, destination marketing organizations, certain 501c6 organizations such as chambers of commerce, eligible new organizations. Now, the still eligible are the sole proprietors, the independent contractors, the self-employed individuals, business entities, partnerships, corporations, LLCs, the 501c3 nonprofit organizations, as well as the 501c19 veteran organizations and tribal businesses. Those are all organizations that are eligible for the Paycheck Protection Program. And so it's really important for you to know you can now apply. It's open. The platform that we have at Jumpstart TV, it's really simple. Linda was a testimony early on our first show about how easy it was. Carolyn talked about the first stage of it, actually letting you know if you were eligible before you moved on to getting all your documents in order. And so I think it's important for you to go onto the website, into the marketplace, and see if you're eligible and apply it. It's a simplified system. And Teeka, we thank you for being on, and for more importantly, helping the territories in Puerto Rico to get this money, because we've had some really hard hit businesses in the territories in Puerto Rico and in the U.S. So I'm happy to have you on, and I just want some of our co-panelists to jump in and talk a little bit more about the process, or some of the barriers, or even some of the best practices, because we're dealing with businesses every day that are looking for assistance.
Terry,
can I
just Terry, real quickly, from a housekeeping point of view, for all U.S. territories, specifically Puerto Rico and U.S. Virgin Islands, when you go to jumpstarteconomy.us, you click on the menu button that says USVI. Again, when you go to www.jumpstarteconomy.us, when you get to the site, click on the menu button that says USVI. And you can also click on the menu button that says Jumpstart Funding. Those are the two specific areas on the website if you are in the U.S. Virgin Islands and Puerto Rico. And then, of course, later on, the other territory as well. Click on the USVI button, and then you also click on the Jumpstart Funding menu as well. Thank you so much.
Thank you so much.
And I want to ask a question because I'm realizing that the territories didn't seem to be treated the same way as maybe the mainland. Could anybody please just answer that and really build on that so that people understand that very clearly? Because I don't think people really understand that they're treated differently.
I think Anthony and I had this discussion yesterday where the banking system is a little different. The banks that do participate in some of these regions, particularly those that are in the Pacific, or farthest, the American Samoas, Guam, and otherwise, the banks are different. And I know this was one of the areas that Anthony was going to be following up on, and I'm happy that we will now be able to look into including our other territories as we proceed in this process. Earlier on, Terry, and again, I think Rita was so educational. I know there were many people listening in and the questions were answered. And the good piece about the marketplace is the pre-qualification of application. Who is eligible. In that initial application, you get to see if you're prepared and ready to have all your documentation ready for the process. The nonprofits, Terry, as you were saying, many of us were not eligible because of the size of our nonprofits and small business owners in the first distribution of this benefit. And I'm so happy that now we have the inclusion now of this new entity, that we're all being able to extend this to our business partners. So, here in the mainland, in Florida and on the East Coast, we have a lot of business owners who really were not included because the big banks did not accommodate these small mom and pop shops and businesses. So thank you so much, Kiki, for being here. And we look forward to really collaborating and including our folks in this process.
Yes, one of the things that we do offer with that CBG Funds, we offer an in-house process because we understand the small business owner may not understand the process and the paperwork. That's one of the biggest hurdles. I can tell you that a lot of the business owners stay away from the process and stay away from the program because they're inundated. They hear a lot of paperwork they have or need. They know they don't have it, and it shies them away. So one of the services that we do provide for our clients is we have in-house accountants, in-house CPAs, we have in-house administrators who assist all of our clients so that we can package their loans, get them submitted in, and we have a streamlined process that makes it super easy for them. We also have client advisors that we assign to the business owners if they have just general business questions they need to have answered. So we do provide this service and super, super, super easy.
Awesome.
Yeah. I would say that I thought we were doing a pretty good job of streamlining and keeping our incomes, our expenses separate. But this process has shown me that even more so, I needed to take it seriously. I mean, I have a husband who's an engineer, so he's the accounting brain in the business. And for years, he kept saying, please, if it's a Caribbean American passport expense, use the Caribbean American passport account. But going through this, and I think a lot of business owners are realizing this, we're going to come out on the other side as better business people for having structured ourselves in a proper way, right? In doing business properly. So it might seem hard now, but this is the structure we need to scale. I just wanted to get that point across to folks.
Yeah.
Gwinnett, that's so important. That's so important. Even in the marketplace, we talked about this even before this loan process about having your financials in order. One of the main things that businesses has always said is access to capital has been a barrier for them, right? And so a lot of that is around going to banks, asking for loans. Even if you have a banking relationship, if you don't have your financials in order to prove that you can pay the money back, they're not going to give you the loan. And so, this is real, like when I said, this is really important for you to now get structured, for you to now have some kind of payroll system in place where you're paying the things that you need to pay. that you are segregating your accounts. Make sure you're segregating your accounts. And more importantly, like Teeka said, and I tell my businesses all the time, you need an accountant, you need a lawyer, and you need a sponsor, because not everything can be free, right? So you need these things to have in place so that, and I always say this, get ready so you don't have to be ready. So now that we're applying for PPP and we have this platform that's streamlining the process, when that is saying it, putting you in a better financial place so that we can, as Carolyn and I said before, stay in the black. We were in black because we want to stay in the black.
I like that.
A lot of what we're doing. We got our pearls of wisdom and we're staying in the black. So thank you so much for that.
I have a question for I have a policy question for you, Terry.
Okay.
Regarding the territory, because obviously you spent 8 years? Is it 8? Yes, 8 years working with the SBA as an advocator. And then the second question is going to be for Teeka. Teeka, you have been. This is going to be the second round for you, right? This is you've been part of the first round, and I want you to kind of, if you will, share some real life sort of testimonial, because the average person, the mom and pop local businesses are listening to this, and sometimes they're intimidated by the process. And if you can kind of sort of paint a picture, if you will, of some of the experience you've had, and try to help navigate and give them the sense of comfort that they need, if you will, because there's a lot of hand holding. As a former banker, I did a lot of hand holding, okay, because there's a lot of paperwork, a lot of documentation, and so people get overwhelmed by that. And so after Terry answered the question about the policy side, then if you can elaborate on that, Teeka. So Terry,
yes,
why is it that if the SBA is guaranteeing a loan, and it's a head scratcher for me, okay?
Yeah.
Why is it if the SBA is the guarantor of the loan, why would banks be reluctant or would not be willing to loan to a particular SBA a potential applicant? And particularly in the territory as well, because there is that issue of some banks don't want to do SBA, and then of course you add that, you compound that with the problem or the uniqueness of being in the territory. And a lot of banks simply just maybe don't want to touch the territories.
Okay, so I'm glad you asked that question. I got this question a lot, actually. When we talked about access to capital, we used to have roundtables with banks and with small businesses, and the banks would say, the small businesses would say the banks aren't lending, and the banks would say the small business aren't asking for the loans. And so which comes first, right? The chicken or the egg? So one of the things that, in asking that question, it's a loaded question. Let me tell you why. So if SBA with taxpayer money, remember, SBA with taxpayer money is guaranteeing the loan, it should be simpler for small businesses in need to get the loan. But you still have the 3 C's. So, you have the credit, you have the character, and you have these other things that take place when you're looking at an individual for a loan. And so if you get the small businesses, and yes, they're in need of a loan, but can they pay the loan back, right? Because the SBA is guaranteeing a loan, but the loan still has to be paid back in its taxpayer dollars. And so what I'm going to say to small businesses that are listening to us today, we're going to go back to your financials, making sure that you're seen in a position where you're staying in the black. And even if you need access to capital at this time, this access to capital is going to build your business, is going to get more revenue in the door. There's a marketing plan. There's some other stuff in place. You're not just getting a loan for the sake of getting a loan. Some of the bankers have even said to me that they would not lend to certain individuals because they don't see where they're going to be able to pay the money back based on their track record. So it's still based on your history. And so what I'm going to ask small businesses to do that are looking to get these loans and access to capital, Gwinnett said it, get yourself in order, making sure you have an accountant, make sure you have a lawyer, but more importantly, take advantage of the small business development centers. Take advantage of the chambers of commerce. Take advantages of these services that are actually getting grant money to help you get your affairs in order. So when you do go to a bank, you're seen as an excellent prospect to get a loan either with or without the SBA guarantee. And so that's some of what my experience has been dealing with small businesses. And you guys are small businesses. Yeah. You've probably asked banks for a loan, and you can also speak to this as far as what your experiences have been, or what are some of the barriers that you're seeing outside of what I've explained.
So
Well,
after
all right, go ahead, Karen. I'll go after.
Tiki speaks, I actually have a question here. Someone is asking, and Tiki, maybe you can attest to this. A business owner who said they've been a small business owner with 3 employees, started the business in 2018, and for 2019 they were collaborating both years of taxes. They were at a loss, and they're asking if they would be eligible because they had no gross income for 2019, no gross income for 2020, and would the application on the website allow them any kind of eligibility? They have been doing 1099s for their contract workers for the last 2 years. And how does this person qualify? Signed, desperate.
We are all desperate. No, I'm just joking. Okay, so based on those scenarios, they technically would qualify as one, and they would be a sole proprietor. In terms of, we can possibly use the calculations off of their line 7 versus their line 31. So again, we like to also see the documentations inside, but based on that, they would be able to qualify at least for the sole proprietors. So if that's the case, the minimum would be $20,833. It could be a little bit more depending on their industry. I don't know what their industry is, but based on just that brief scenario, they would qualify as a sole proprietor. Okay. And the independent contractors would have to apply on their own separately because they're technically not employees of this particular individual. So Mr. Desperate, we will be able to assist.
Thank you, Kiki.
You're welcome.
I think what people need to understand is it may not be about profit, right? I mean, it's about paycheck protection. So don't get hung up about if you were making a profit. I think that was something that a lot of business people were trying to do, is to show a loss, not understanding that it might have been better to pay yourself and have your business be in the black, as Terry's is saying. But again, we're at a turning point where if we don't learn at this point, something's really wrong, because we have the opportunity to learn how to structure properly going forward. We're getting these kind of forums. We're understanding it a lot better. I've been in business for 10, 15 years. And I think what I've learned in the last 2 been much more than the last 10, 15 about really understanding how to structure the business financially.
Yeah,
absolutely.
And I have a question that's really important, that I'm wondering the significance of it in the application process and the approval process. And that is, are banks and lending institutions in general looking for those sole practitioners to have their personal credit score be a driver, or their business credit score to be a driver in their decision making?
They're not looking at credit scores.
No, they're not looking
at credit scores.
Yeah, a credit score is not a factor with this.
No.
Okay.
Not a factor.
That's the best part, I think, in this, and a lot of people can. But does this allow people to now build business credit, do you think, from this?
Good question.
Absolutely. But let me.
Before you do that, Teeka, because I talked about the three C's. It's actually 5 C's, Anthony. It's the 5 C's of character credit, and I want to go over that because that's important for this process, right? For this building your credit process, building your capacity, right? So the 5 C's, the takeaways are: first C is character, reflected by an applicant's credit history, right? The second C is capacity, the applicant's debt to income ratio. The third is capital, the amount of money the applicant has. The 4th C is collateral, an asset that can back or act as a security for the loan. And the 5th C is the conditions, the purpose of the loan, the amount involved, the prevailing interest rates. And those are all things that banks take into consideration when considering your loan, Anthony, even if it's backed by SBA guarantee. So that's important for me to talk about. But there are also others, and Teeka is going to talk about it, but the CDFIs and the credit unions, they have a little more flexibility, but the traditional banks that we talked about, the Wells Fargos, the TDs, the Chase, they're looking for those 5 C's. Go ahead.
And I'm glad you went and said that, Terry, because I think, Teeka, you can answer this being in the business. And a lot of individuals, when they hear the word loan, PPE or otherwise, PPP rather, otherwise, that's the first thing they go to. I may not have the credit that would create a viable loan situation. So we have to emphasize the fact that is not a part of the decision making. It's mainly based on your demonstration of either gross income on line 7.7 or.
Let me kind of clarify a couple of things. Okay.
Yes, Teeka.
So let me clarify a couple of things, because I don't want a lot of things that what the potential business owners can hear today to get them confused. Okay. For the Paycheck protection, when we're just going to speak about this particular round, okay, it is not credit based. Okay. The purpose of the loan is for them to assist with their payroll, okay, and expenses dealing with their business. Meaning it can cover their utilities. It can cover their interest payments for their mortgage. It can cover their rent if they need to for their office or commercial space. It can cover their PPE equipment, protective measures for them to continue work. The majority of it, 60% of it, has to be used for payroll, meaning paying yourself, paying your employees, okay? So in terms of traditional lending, because I also am a traditional lender, a lot of the things that normally we would require is not required in this process. This is what makes it wonderfully and very streamlined and extremely simple for the mom and pop, the hairstylist, the barber, the Uber driver, the Lyft driver, the taxi driver, the small restaurant owner, whomever. This is a wonderful process. So things that we typically would require, they're not going to require this, okay? And in fact, as of March the 3rd, the new applications came out, and President Biden kept into effect because of some of the complaints that the sole proprietors were having, and that's why he increased and changed the way that we can now calculate in the algorithms to formulate what the max will be able to qualify for. So with this process this time, it's going to be a little bit different and a whole lot easier for the average small business person. So yes, in traditional lending, we do have to be more concerned with some of the things about their equity, about their income in this occasion. But this time, it's going to be strictly focused on what your revenues are for your business and what you have been paying out in your payroll. Very simple. Those are the two main factors. So one of the things, as I was saying earlier, that we try to provide for clients, and we try to stream it down to maybe 3 questions. Do you have a valid business bank account? Okay. Have you prepared your tax documentation for 2019? Okay. Do you have payroll if you have employees? If not, we can factor you as a sole proprietor. And because we do know a lot of times people don't have everything they need, we can also use alternative documentation to assist our clients. Really simple. After that, is your account valid? Okay. If your account is valid, we get your application submitted in. We upload our information to support the documentation that SBA requires. We get the notification that your loan has now been approved. We receive your E-Tran number saying that now SBA has given you your approval. And typically within 10 days, the business owner receives their funding. Real streamlined, simple process. Okay. What we have found is a lot of times business owners overthink the process. And that's why we try to come in and help them take some of the thinking away. We do understand some of the complications. We understand some of the pitfalls. And what we try to do is make that process as seamless, because we have the experts and we know what we're looking for, and we know how to assist the clients and make sure they get what they need in as streamlined as possible. We do know that most recently, some of the larger banks and institutions decided with the new application and the new Schedule C, they decided they didn't even want to work with some of the small businesses, smaller, sole proprietors. And we're okay with that, because guess what? That means more clientele. So we're happy with that. Thank you, Chase. Thank you, Bank of America. We love it. Absolutely happy for that. Kudos to you guys. So
I do want to point out that for all of those, because I've been a part of a lot of applicants who went in with a dream, because they were really going in with a dream to the bank. Terry and Teeka, you guys are bankers. You guys know this. They come in and they say, I know it's gonna work, and we're putting this out. And a lot of the bankers have said that we're not in the business of giving out grants. That's not who we are. So we don't see that this is sustainable. we don't see that this is going to work. Now, the truth is, 3 years later, that person put in so much sweat equity that it did work.
Right.
But they couldn't have gotten a traditional loan. So I'm just saying to all of you out there who could not have gotten a traditional loan, this is the time. You've got the receipts to show that you are in business. You have been making payrolls. This is the time to come in and talk. Don't just stay out there and feel like you were burned before asking for a loan. Come and talk to Teeka. Come and talk to Jennifer.
Right. And one of the other things that I want to add is that the 5 reforms, right? And we talked about them in the other show, and I just want to bring them up again, right? So the first one was the exclusivity. And unfortunately, that ended yesterday, but the big banks were able to work exclusively with the business owners, 20 people or less, right? So that ended yesterday, but that was a good formula for some of that 101 that smaller businesses need. The second revision is the funding for sole proprietors, independent contractors. People were talking about them. Self-employed individuals will allow them to use the gross line on their Schedule C. So instead of doing the net, they're now doing gross, which gives them a little more money. And the SBA also is setting aside $1 billion for those employees for those businesses without employees in low to moderate income communities, right? So that was the second one. The third one is fair access for returning citizens by eliminating the PPP eligibility restrictions that did not allow those with a felony within the previous year to apply. You can now apply, however, the restriction is still on those with an arrest or felony conviction related to financial assistance fraud within the previous 5 years. That remains, right? So you have a felony, it's not financial, within the 5 years, you can still apply. And that's important for some small businesses. The other one is allowing those who have struggled to make are now delinquent on their federal student loan payments to apply for PPP. You're eligible, even if you have a delinquent loan or your loan is in deferment, you can apply for PPP. And then finally, immigrants, right? Immigrants are really important. So ensuring access for immigrant small business owners who lawfully reside and pay taxes in the U.S. by clarifying the individual taxpayer identification number. So they're able to use their TIN to apply for the PPP. And those are all important reforms to this section of the PPP because those individuals were excluded the first time around.
Yes, exactly.
Very nice.
Extremely important, because I think one of the things that's so important about this program is being able to address the detail and the pathway, and then to have someone like Ms. Cole who can sit down with the small businesses in these communities and say, our doors are open. You don't have to go to the big banking institutions. We are qualified and we're experts and we have the competency to support you all the way through the process. Obviously, there's no guarantee. It ultimately has to be a decision made by the underwriters. Is that correct, Teeka? That there's no guarantee, but
no,
there should.
But luckily, we have not had any declines so far.
Yes.
And we've done between 3 and 5 million already. So we've done a lot of funding. Yes. And so I can tell you our average, it ranges anywhere from 20,000 all the way up to 150. I have some have gone beyond it to 300,000 in terms of funding. And we also want to make mention that we do talk about the nonprofits. Sometimes that's overlooked. We have a nonprofit. We also encourage you to go ahead and apply as well for the PPP2. You would need a different tax form, and we'll go over that as well. You need to have your 990s, and we have to require certain things that you need to submit. However, we assist clients with that too, because we know a lot of them, if they have the nonprofits, the ministries, the outreach programs, we understand they're trying to give back, and they really, really, really need the assistance. We encourage them to apply too, because a lot of times they don't know. So it's a great process. It's a great program. I tell clients all the time, this is unheard of. Okay. You need to take advantage of it as you can. And even if you think you won't qualify, still submit an application, because there's always 2 responses, an approval or not right now in our book. So we'll go back and submit you. So it's okay.
No, it's not a denial. No, it's not a denial. That means we got a little more work to do. Got a little more work to do.
Exactly.
When does the program end?
March 31st.
March 31st.
Because you made a very good point, Teeka. You said something really important, that if it's a not right now, you'll go back and apply again. So what's the window between getting, I know 10 days from now, so you're able to go back just in case you have to go back and apply again by the 31st of this month?
No, what I try to do is we are very hands-on with SBA. We do have meetings twice a week in terms of our webinars. We do email. We can see what's going on, and they are very responsive to us because we do move a lot of volume, and that typically happens. So a lot of times if there is an issue, we will say, hey, what's the issue? Why isn't this client getting their approvals, or what's the hold? Yeah. And then once we get those information, or some of the validation codes you may have heard of before, we try to go ahead and correct those validation codes and then get that information over and get it corrected. And typically we get it funded. It may take a little while longer. It has gone sometimes up to 15 to 20 days, but at the end result, we did get the funding. And that's ultimately what matters to the small business owner. But we're very honest. Go ahead.
Oh, I'm so sorry. I was just getting excited about what you're saying. So how do folks connect with you in your company?
Link through portal with Anthony on this, and then it'll come directly with us, and then go from there. And then I'm also gonna be planning a trip to the Virgin Islands and everywhere else.
Me too. Me too. Can you take us?
Anthony, me too. I think we're all supposed to go.
Yes.
Exactly. And so
I'm looking forward to that. I'm looking forward to really planning a really nice retreat because I know you guys are cold up there. And so I'm making sure that I'm building up all the nice heat and sun for when you guys come down. So that'd be great. But just to kind of segue off of Linda's question, again, there are two ways folks can apply for the PPP loan. Seti, as we're a nonprofit organization, we're a community development organization, and so what we've done is we've partnered with other lender partners. Okay, you've heard the discussion on many fronts where it depends on the bank, right? Some banks are going to either have an appetite or don't have an appetite for a particular market, et cetera, et cetera. Then the issue of U.S. states and then territory. In the case of Teeka's company, she's the CEO of CBG Funding, and Teeka's firm is going to be responsible for the U.S. territories, which includes the U.S. Virgin Islands and Puerto Rico. So when you come to www.jumpstarteconomy.us, if you're in the U.S. territories, but specifically for those who are hearing us on the live radio broadcast in the Virgin Islands and in Puerto Rico, when you come to www.jumpstarteconomy.us, you click on the menu button that says USVI. Again, when you come to the website, click on the menu button that says USVI. Now, for the other territories, okay, you click on the menu button on the same website that says Jumpstart Funding. Okay, so it's the same website, but in terms of if you're in the territory, Teeka's and what wonderful thing about Teeka's firm, she has it's like a total turnkey. She brings you the ability to be able to literally walk you through the process and have all of the different external outsourcing that you would normally need to do this. She has the core group of professionals that will help you because, like she said, she hasn't had any applications declined yet, and that's because of how she has her program set up. And so, Linda, I wanted to be able to make sure that was clear in the question you asked in terms of how the relationship between Seti and Jumpstart, it's all integrated, it's all connected to the same portal as well.
Yeah. And Anthony, I just wanted to ask, so Puerto Rico, as you said, if you're looking for USVI, you do USVI. Is Puerto Rico there as Puerto Rico, or
no. For the other, I did the USVI separately because obviously Seti is headquartered in the USVI. Okay, that's where we're domiciled. Okay. Right. But for the rest of the other territory, territories, which include Puerto Rico, on the same website, you click on the menu button that says Jumpstart Funding. And that's where the other territories like Puerto Rico can apply as well.
Okay.
Yeah, absolutely.
I'm sorry, I didn't mean to interrupt you. I didn't mean to interrupt you.
No, that was very good.
Okay. Unfortunately, our time is winding down too quickly. But one of the other things that I wanted to add, and Teeka, we talked about this, but when we're talking about the PPP, So 60% is forgivable, right? So just wanted to reiterate that for those individuals. So
let me clarify a couple of things.
Okay, give me 1 second, and then I'm gonna let you jump in. So for the lender to cover employee, it's not a guarantee forgivable. That's number one, but up to 60%, and so 60% of the loan, 40% of other covered eligible expenses, which is what I want to talk about. We always talk about the 60% that may be forgivable, but the other 40% of eligible expenses, the payroll costs, the rent, mortgage interest, utilities, operation expenditures, property damage, which is really different this time around, supplier costs and worker protection expenditures, your PPE, all of that's included in that 40% of other eligible expenses. And then Teeka is going to jump in and clarify the 60% that could be forgivable. Go ahead.
So actually, the whole loan is 100% forgivable. However, we advise our clients for when we're doing the expenses in order for us, because we also issue your forgiveness as well. So in order for us to give you the 100% forgiveness, at least 60% of it has to go to your payroll. The other 40% has to be broken down for the other expenses. And if you want to do the full 100%, that's fine too. But in order to at least get the basics, and we will start issuing that out between 8 and 24 weeks of after you receive your funding. We do want clients to know as well too, they will, if they don't meet those qualifiers, they still have a 10-month deferment before they will have to start paying their loans back. And if they decide to do that, then it is at a 1% interest rate. So overall, and then if it was funded after the 2020, that means they have a 5-year window to pay this back. Prior to that, they only have 2 years. So even if a client, we don't want a client to stress out and say, oh my God, I can't, spend all this money in 8 weeks or 12 weeks. It's perfectly okay. As long as 60% of it, and you do provide us with the expenses, and if not, we will be able to assist you with that when it comes time to issue your forgiveness for 100%. One of the things we really want to encourage is individuals to make sure they take advantage of the forgiveness, because this is, again, unheard of. And one thing we want to cover that we haven't talked about is if you have more than one business, you're eligible to receive multiple funding. So we want
wow.
Exactly.
Earlier.
Yeah, we talked about it in the last segment.
And does that business have to, that business also has to have a separate EIN and has to be established prior to, no? Oh,
it doesn't have a separate EIN. You can be a sole proprietor. You can have an LLC as one corporation, for an example, or one entity, and then your second business can be a sole proprietor. So, if you do have a separate EIN, that's perfectly fine too. But again, we know some people have a side hustle, and so we know that with their side hustle, it's been very profitable for them. Where I come from, we always had the lawn man. We had someone, doing little exercise things, whatever. You had the barbecue man in the neighborhood. I'm from the South. So you always had somebody doing a little side hustle, somebody, cutting the grass, washing the cars. They're eligible. We have those clients and we service them. So we want individuals to know they have main businesses. Someone may own a funeral home. Someone may own, a full-time restaurant. But we also want them to know they are eligible in their second business as long as they have a regular business account and they can show that they had some money going into that, because we understand everyone does not handle their finances accordingly, structurally, as we know to do with basic business. So at this time, SBA is allowing those type of funding treatments to be approved, and it's okay. And we're getting them funded with that. So we just want to point that out as well too.
Does that business have to be? And I just want to clarify that real fast, that the business has to therefore be established also before February 15, 2020, correct?
Yes.
All the businesses. Okay. Go ahead, Anthony. Ask the question.
We have a viewer, Gia McQueen, with a question. I don't know if you can read it. It's kind of small on the screen, but I can read it out.
I can actually talk about it, because in the previous segment, I without her knowing, I think she came on this one. I brought up her situation because she's a massage therapist and lost income, and that was one of the persons I was asking it about. She just probably didn't see that segment. She's on this one, but Gia, I asked about massage therapists and how you would qualify as a solopreneur. And so then we'd be able to show what you lost in income from 2019 to 2020. So I got you. I will take you through the jumpstart.us.
Yeah, www.jumpstarttheeconomy.us.
Yes, I asked a question about you earlier, Gia.
Right. My massage therapist have a loan. My hairstylist have a loan. So anybody who has done my aesthetics, who keeps me tight and right, they have a loan.
That's Gia. All right.
I love it.
I know that they have a loan. So
I love it. I love it. I just wanted to reiterate, because we only have I don't know how this time goes by so quickly, but the maturity that the long-term maturity that Teeka was talking about, a lot of us are afraid to get a loan because they're like, oh my God, I'm going to have to pay this loan back. And so just to reiterate what she said, is up to 100% forgivable. So it's a fixed interest rate of 1% that is non-compounding and non-adjustable. There's no requirement for collateral or personal guarantees. There's no fees or repayment penalties. There's a 5-year maturity. Payments start once the borrower knows how much the PPP loan will be forgiven. The lender will notify the borrower, and Teeka was talking about how she's, very hands-on with making sure that the borrower understands the timelines. And if the borrowers do not apply for forgiveness, the payments start 10 months after the last day of the cover period. Now, Teeka covered all of this. I just want to reiterate it for those that jumped on after, that these are the maturity. This is the forgiven. If the PPP is not forgiven 100%, these are all of the loan terms of maturity.
And then, Terry, you mentioned something in the first segment regarding grants, the EIDL grant. Can this money that's not forgivable in any of the funding, you are required to repay that grant. Can any portion of these funds be used in that repayment?
Not the grants. The EIDL grant is not, you don't have to repay the grant.
Yeah, you have
the EIDL loan, you have
the EIDL loan. Oh, okay, the EIDL loan. Yes.
And then some of us, and that's really important too, Linda. Some of us were invited, targeted small businesses that received the EIDL loan and only received like $1,000 of the grant. It was a per person $1,000. Yeah. You are now invited to come back now and apply for up to $10,000 up to that money. So you're able to get that money, that grant money. You're able to get it. So I encourage you, if you got that email, please fill out that information. It's asking for your payroll, your 2019, fill it out, send it in. I mean, like Teeka said, if you're not in it, you don't know what you're eligible for. She said apply anyway, right? So
yeah. This is the part I also want to put in here. This is a unique opportunity. We can get it written off as a grant. But if you're in business, folks, this is an opportunity to get a jump start with a loan that you would not have been able to get prior. So if you're not honestly prepared to even pay this back at a loan at the terms that this loan is being given at, then maybe you should not be in business. And we have to be harsh with people too at this point. Maybe they should not be in business because you should be in it to be able to pay this back as well if it cannot be totally written off. So I think this is a unique opportunity. We should be taking advantage of it. If we didn't, we have nobody else that we could complain to because it's on us.
Because Jumpstart is what we do here.
That's right.
Yeah.
And I also wanted to just remind folks as well that if you are if you have a student loan debt,
that's right,
you can still apply.
That's right.
Yes, because a lot of folks are still struggling with that. And remember, this is to rebuild our economy. As horrible as COVID was and is, this country has gone through similar times.
That's right.
And so here is an opportunity for us to build back this economy. As the new president said, build back better. So let's get to it.
And one pitfall that our last guest did not get a chance to share, but Teeka, I'd love to get your opinion in the entire panel. We've heard a lot of scams and folks that come and talk about they can do this, and you get emails after emails. But even financial planners are beginning to kind of pull back and draw back because they don't want to be perceived as you get the loan and then you actually invest the money. You don't actually put it into actual payroll with other staff or replace it, but that you find a way to make money on the money. What's your advice on, making sure you don't fall into that kind of a trap or even that mentality and be one of those individuals that think you can hedge or leverage the funding for now and win out on the back end?
Don't do
you know
it.
what I mean?
Yeah,
just don't do it. There we go.
Let me speak on this really quickly. Again, we're inundated with all kind of conversations, and people ask to partner up with us so that we can encourage our clients to go and do this. Again, this money is for your payroll. And obviously, you need your own payroll to sustain your business, and you have to pay yourself. So at the end of the day, you don't have those type of resources typically because you need your payroll and your workers. You might have equipment, you might have vendors that you owe that you haven't been able to pay for months. So people have to understand that. Even if you have a little extra, you need to put it up into your business savings so that you can make sure, and or if you have taken this money, you want to reinvest it in your business to have some type of profitability from that standpoint and leverage within yourself. So you don't necessarily want to go ahead and please, none of my financial advisors, don't call me. And because my attorney's listening, you don't want to leverage against those type of opportunities later on, but you want to take this money to help get yourself back solvent. That's something that we always advocate for your business. Be solvent. And so from that, take the opportunity, reinvest back into your business. If you have to buy supplies, products, a vehicle. And when I say a vehicle, mean the transportation that you're using for your business, not a luxury car.
Yeah.
So that's not what it's for, because you will have to prove expensive. One thing, I don't know if you guys covered in the first segment, they have also implemented in the new policies a 5-year look back. So for 5 years from now, they may come back and want to see how did you spend that money. Exactly. That's right. So one of the things we encourage our clients to know, you can pay yourself. That's what it's supposed to. If you have 5 employees, 3 employees, 10 employees, 20 employees, you can pay yourself. If you have more than 20 employees, 30, you can pay yourself and your employees and take care of the things you need for the expenses. One of the other things we talked about prior to on our Zooms weekly is your expenditures for your PPP products to keep yourself safe, your employees safe, your business safe. And so with those things, those are things that are covered. So again, you probably on average won't have any money to invest with someone else, because if you're like most businesses that we've seen, they've been struggling and they need all the resources they can get to be able to sustain.
Yep. I see Gia asked another question. I'm a little unclear on the question. Is she talking about automatic payment for payroll?
We only have 2 minutes, so we're going to have to segue over to the third and final segment. So look at the clock. So if we don't answer that question in this segment, we can answer it in the second segment. The second segment, we're going to focus on restaurants and technology companies. So just to give you a heads up on that, we'll have a guest expert on that. But real quickly, if you, Terry, before
so she's asking about the client. She said if there's any way the client to set up a automatic payment that it can be taken right away so that the individual don't drop the ball in paying back this business loan, please and thank you. So as far as the SBA loan, that's different. That the SBA will send you a document telling you, when the loan is to be paid back, how much the loan is. It doesn't start right away. Teeka, you spoke about that, right?
Let me answer her question really quickly. As a lender later on, outside of you have 10 months of deferment. So after the 10 months, you can set up automatic payments if you think you're not going to qualify for your forgiveness, but you should be qualifying for the forgiveness and you won't have to repay back anything.
Right. And one of the things I want to add, Gia, is that you should also have a payroll system in place to make sure that you're taking out the monies that you're supposed to take out. You're paying yourself first, you're paying employees. I always advocate for that for my small businesses, whether it's an ADP or Paychecks, any of those programs, and all you're doing is just printing out a sheet. Teeka, you probably have something in place. You print out the sheet, you give it to, for forgiveness, and that's simpler than you trying to take out your calculator and tell me how.
Terry. On that note, we can transition to the third and final segment. Woo! This is the Marketplace Show, Reset and Jumpstart.
Reset.
I'm going to talk to you on the other side.
All right.